Okay, this is the weekly outlook for the Nasdaq futures and the dollar index. Okay, we'll begin with the dollar from the daily chart. Very simply, we predicted that this would retrace on Friday, and that has come to fruition. We did take this initial draw. We have this inverted SIBI, we have this BISI, and I want to see us trade into this BISI, and then potentially go back into our draw at this high, and this high. The reason I'm looking at this high first is because it's an individual one, and then these two are more relatively equal than this. But you can look at all three of these highs as one low resistance liquidity pool, and you can expect a distribution throughout all three of those highs, rather than just looking at one at a time. That'll be fine. I'm just separating them for now because this would be the short-term objective for me, like a low-hanging fruit objective. And once we break that, I would want to see some willingness to keep trading higher. So if this was broken at a time of high volatility, like Monday's market open, and then we trade through it, or Tuesday's market open, or Wednesday's market open, and it wants to keep distributing higher, it would be very obvious if that's happening at 9:30 that it's just going to keep trading higher and higher and higher. And then potentially once it takes this, if the right market structure is there on the 1-minute chart or the 5-minute chart, it will be really easy to tell if it's going to keep trading through this and then potentially into this bounce price range. So overall on the dollar, bullish, but we may get the first or second day of the week trade down into this BISI and this breaker block, and then we can trade higher. This previous draw is a breaker block. This is a low, a high, a low, and a high. So that is a breaker block. These PD arrays we used to determine that it would go higher after we had this turtle soup, which was inside of a daily fair value gap. It rejected that, left this bounce price range and a fair value gap, which became an inversion fair value gap. This order block was traded through, and it was traded through with displacement, so it left a fair value gap there. That's high probability, and sometimes that will give you a breakaway gap, which is indicative of trading into a high time frame liquidity pool. So something like this, once you break away from a range like this, it's very likely that you'll start spooling to a new range level. So breaking through these highs, that would be a completion of what this breakaway gap is telling us. Okay, here on the Nasdaq, we're looking at the daily chart on the left and the 4-hour chart on the right. Using this bullish order block here from the daily chart, and then this bearish order block is from the 4-hour chart, and we've also got this teasing range, which we'll talk about. We've also got this short-term range that we'll talk about. So from this daily chart, the daily order block, it's traded through down here with a little bit of a wick, but it's pretty much respected for the most part. Trades back into it with a wick, quite a long wick, but it does trail back up, leaves that small body, uses the upper quadrant of that wick on the 4-hour chart, well, not the upper quadrant, but it stays in the upper quarter, and then trades into this bearish order block. So we're kind of bouncing in between these two significant PD arrays. This PD array is a bearish order block, so you'd expect it to take us lower, right? But it is also in premium, so this red part is premium, and this black part is discount. When you're trading in between a range like this, and you're expecting one-sided delivery, or let's say you're bearish. If you're bearish, you won't sustain premium pricing for very long, meaning you won't spend a lot of time in premium once you've already put in a range. So from this high to this low, that's our range. From there, we can deduce that this is our premium. If it trades into premium, it should be very reactive and want to basically get out of premium back into discount and distribute lower. So we'll have to see how that goes on Monday and Tuesday. If it wants to be reactive and at this point, or maybe it wants to take out this high and then go into this bearish order block, which is also this SIBI. That's allowed too, plus it would be an optimal trade entry. Now, being in all-time high conditions, you don't just want to say, okay, it's bullish, 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 when we've already had a very large sell-off. You have to entertain the possibility now that with the dollar being bullish, Nasdaq could potentially leave all-time highs. Now, for a beginner trader, it's usually better that you just assume it's bullish in all-time highs until you're proven wrong. But if you're a little bit more of an intermediate trader, or you've been doing this for a while, then I think now you can start to progress beyond the idea that all-time highs will always be bullish into, okay, all-time highs will mostly be bullish. Eventually, we're going to have to leave that all-time high. Now, I'm not saying you should pick the top, but I'm saying that when you've got a sustained price delivery to the sell side like this, and you're bullish on the dollar, which we are, well, we're bullish on the dollar, then you can begin to entertain the idea that we may leave all-time highs from here. And being bullish on the dollar means that Nasdaq is more inclined to trade lower because Nasdaq's measured against the dollar. So if the dollar's more valuable, then the Nasdaq's going to drop in price, very simply. So will the S&P, so will YM, so will euro dollar, so will pound dollar. Anything measured against the dollar will. Okay, this is just a 4-hour chart, but it's zoomed out. And if you just look at the range that we're currently working within, it's a lot more sustained to the sell side than any previous range to the sell side that we've had. Like this one was a very short-term run lower. It wicked lower below the slow, and then it gave that as a tail soup, and it traded higher again. But here we're pretty much just running and respecting every bearish PD array that we come across. So this should be respected, this bearish order block respected, this bearish order block was respected, but we'll see if it gets respected now. It could have just been a slightly longer run to the sell side, and then now it's going to trade back into all-time highs above these relatively equal highs. That is possible, but I would also entertain the idea that it could potentially now leave all-time highs with the dollar looking like it's about to rally. Maybe Monday and Tuesday it'll trade higher and then get an optimal trade entry and then drop. But I'm not saying anything in stone for this week. It is a non-farm payroll week, so Friday may really askew the results here. But if I had a gun to my head, regardless of being in all-time highs, I would say that Nasdaq is slightly leaning towards the bearish side. But that isn't a hard and fast bias. I'm not going to be operating under that bias for the week, like saying every day is going to be bearish. I can only sell. I'm not going to be doing that because I have to be very flexible here with the idea in mind that my bias isn't real concrete this week. I'm not super confident in it. So it's more about being nimble, having an idea of where it could potentially go, maybe into this order block and trade lower, maybe above that order block into this bearish order block and then trade lower. It's kind of like a play it by sight type of scenario where you just have to go with what the day is telling you. That doesn't mean you have to like only look for short-term scalps. You can hold longer positions, but I wouldn't be as confident doing it this week because we just had this retracement off such a sustained run lower that it's possible it could just run into all-time highs. But I could also see it bouncing between these PD arrays for a while, maybe getting a consolidation week until the Friday. So, bit of a tricky one, but no hard bias for me. Not at all. No hard bias. Okay, so we're looking at the economic calendar here. Monday we have pending home sales. It's just orange folder, so don't really worry about that. Treat it as a no news Monday. And it's non-farm payroll week, so it's not going to be, I'm not going to say don't trade Monday. I will be trading Monday. And on the non-farm payroll week, you do want to be trading Monday. So, in my opinion, London, pre-market, New York AM, they will be fine on Monday today, on Monday this week. Tuesday we have 10 a.m. jolts. Tuesday we have 10 a.m. jolts, and that means that silver bullet, if you're trading the AM session, it's going to be pretty good. You'll probably want to wait the first half an hour of market open, let the opening range form, let this news come out, and then look for silver bullet setups. Or you can trade the pre-market and silver bullet, both will be fine. Wednesday we've got OPEC meetings, that's just oil stuff, it doesn't really have an effect on indices, so don't worry about that. 8:15 and 10 a.m. high impact news. Just don't be in the market when those are coming out. But again, it's fine to trade in that day. You just don't want to be trading when the news event is coming out. So if you're in a position at 9:58, close it, wait for that news, and then you can look to trade again. Thursday unemployment claims, but it's the day before non-farm payroll, so you don't really want to be trading very much on Thursday, if at all. It's just going to be high resistance liquidity conditions. That's pretty much all you'll get on Thursday, where it kind of moves, I don't want to say randomly, but less algorithmically. It's going to be harder to predict. And if you do trade it and you get it wrong, you may think that you did your process wrong, or you didn't follow the rules correctly. In reality, you could have followed everything correctly and it just went wrong because it's the day before non-farm payroll. Friday is non-farm payroll. You don't want to be trading until non-farm payroll is released, as a rule of thumb. Once it's been released, you can take all the trades you want, but let some more information play out on the chart, especially if non-farm payroll is a big candle and it takes out both sides of the range, or it takes out one side of the range. You want to let more candles form, because after that non-farm payroll release, for 30 minutes, you're going to be creating a new range, typically. So you want to wait that out, where you're not getting in the second non-farm payroll has been released and all that impact's done. You're not just targeting the data high and the data low. You're letting a range play out. You're letting a narrative form. And if on Friday you can be in front of the charts while this is happening, it does help your narrative building skills, in my opinion. So if you can be there, even though I don't want you to trade the non-farm payroll event, if you can just see it happen live, and then you see how that new candle forms, and then you see how the range after that forms, it's very useful for your tape reading and narrative building skills. And that's 10 a.m. news, so you can get a silver bullet up. I think Friday will be quite a volatile day. Obviously, we have an off-on payroll, so it's not groundbreaking to say that. But Friday is going to have a lot of volatility, and there's high impact news on Friday. Then the days without high impact news are not going to be crazy volatility like Monday. It's not going to be crazy volatility. But I still think it's going to be fine to trade, so you can do what you will with that information. Okay, that's it for the weekly outlook this week. Very simple, nothing set in stone. It is non-farm payroll week, so your trading should all be done on Monday, Tuesday, and Wednesday. Thursday's AM session and PM session you want to avoid. And then on Friday, after non-farm payroll has been released, then you can look to take trades. So thank you for watching. Hopefully you've found it insightful. Hopefully it helps you in your week. Good luck and good trading.